Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. Charu Chanana joins us today on the 31st of January. She's a market strategist from Saxo Markets Singapore. Charu, good afternoon.
Good afternoon, Brian. Good to be back.
Good to see you, Charu, after the long holidays. Now, before we get your insights, we're going to take a look and see how markets are performing in the first half of the day, starting with crypto markets. Bitcoin is at 22,843. It's down 3.68%. Ethereum is at 1,571. It's down 3.96%. Now, looking across the regional stock markets, we start with the SGX, the Straits Times Index, is down 0.12%. Bursa Malaysia is down 0.7%. Shanghai is down 0.41%. The ASX All Ordinaries is down 0.25%. The Nikkei is down 0.22%. The Hang Seng is down 1.15%. And rounding up the markets numbers is the Kospi, which is down 0.7%. Charu, it's a sea of red across the region. What is the reason for that?
So I think it's a big week that we have right now. We have some major central bank meetings. We had China coming back after a week-long holiday, and we have a slew of important earnings ahead as well. So I think investors are obviously getting a little bit cautious now after a good run that we've had since the start of the year. But potentially with all these market risks, event risks ahead of us, I think it's time to, book your profits and kind of stay on the sidelines, I guess. I think that's what is really the trend that we're seeing at the start of this week.
Okay, and Charu, you're talking about markets on the up. The IMF has actually raised its forecast that the global economy will grow by 2.9% this year. Now, that's quite a contrast from the downgrades that were happening last year throughout the year as the IMF revised estimates lower and lower. What's your take on this very early in the start of the year?
So I think it's obviously a good sign after those 3 downgrades that we saw last year. And potentially that is the narrative that we've seen since the start of this year. The soft landing narrative has started to gain a lot more traction compared to the recession calls that we were seeing at the end of last year. And that's mainly because of 2 big reasons. One, because Europe did not face as harsh a winter as was expected. So it does seem that they could potentially skirt a recession there. And secondly, China's reopening has certainly been much faster and much smoother than expected as well. So those 2 big economies contributing to a lot more upside for the global economy, but also filtering, especially China's impact, as you and I have spoken earlier about what that could mean for Asian markets. So I think it was a good sign to see Asian markets and emerging markets being really on the positive side in that IMF report as well.
Now, how is that weighing in then on investor sentiment toward what the Fed is going to do? Because will the Fed then downshift again this week?
Well, the broad consensus, whether you look at the street or you look at the market pricing, it does suggest that the Fed could potentially go with a smaller rate hike of 25 basis points this week. My sense really is, Brian, here that, the data has been very volatile. It's too early to say that, in fact, inflation is no more a problem. Certainly, it's past the peak, but there still are upside pressures, and we still can't say with conviction that inflation could go back down to Fed's 2% target even next year. So there are a lot of risks still on the horizon, even on the economic growth front, even though data has been a little bit better than expected of late. But, you still can't say that we can completely avoid a recession at this moment. So I think the Fed is just really buying time. So it does make sense to go in smaller increments so they can continue to elongate the hiking cycle. So they have more incoming data to kind of make sense of. I think that's the reasoning that I have potentially for why Fed could downshift to a 25 basis points this week.
Now, Charu, on that note, I want to swing closer to home to Asia, particularly now put the lens and the spotlight on the Indian market, because India had a great run last year, one of the best performing stock markets in the world. But the Adani scandal has basically spooked foreign investors. Give us your take on what your sense is in terms of how this will play out, and how are investors reacting?
So what I've been, getting a lot of question on related to this Adani route is obviously what is the contagion. So I think that really is something that is on the minds of investors, especially those who are directly exposed to the Indian markets. And what I'm looking at here is certainly there are some public sector banks, the State Bank of India, for example, and also the LIC, which is the Insurance Corporation. They do have some amount of exposure to, this whole route that's going on right now, and they might have to take some hits on their balance sheets. But on the broader scale, I think the Indian story of, demographics or urbanization and the rising middle class, and even those supply chains moving out of China, they continue to support the India story. And I don't see any broader dents to, the whole positive story that we've had on India for some time. The key consideration here really is, how much of a confidence impact it has on foreign investors. And that's certainly, I think, that has some scope of a negative, move there, because, the whole corporate governance issues that we have in India have just come back to the limelight with this issue. And that does mean that investors could be a little bit more cautious of giving India the premium on, the valuation that it really enjoys to other emerging markets. So the question is that premium justified? So I do think that there could be some dents on investor confidence, and especially because India has been trading at a higher price now compared to some of the other emerging markets, which are much cheaper, and, they provide better opportunities as well.
Now, Charu, final question. We've got tech earnings coming up this week in the US. What are your thoughts on that? And what are you looking out for?
Yeah, I think interesting one. I think it's really a big week. And the big ones, certainly, that we are watching are the mega cap earnings from Apple, Amazon, and Alphabet, the Google parent. So I think the major story here is that there are a lot of wage pressures in the US, and the companies that have the highest headcounts obviously get hit the most with those kind of labor market wage pressures kind of things. And that does bring the tech in the limelight. But also, of course, I think besides the margin pressures, again, something we've already talked about previously, is that, it is a lot of investors have holdings in these tech stocks, and a lot of high contribution is given to the indices as well. So any impact that we see, under delivering from the expectations will potentially have a huge impact on the market as a whole. And that's why, what we discussed right at the start, we are seeing some investors turn cautious and, start to book profits in the markets right now.
Now, Charu, it's always great to have you on the show. Thank you very much for your insights.
Thank you, Brian. It was a pleasure.
I'm Brian Fernandez, and we've been speaking to Charu Chanana, the market strategist from Saxo Markets Singapore, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.